Escalation in trade tensions, China increases tariffs on U.S. imports to 125%, in a dramatic turn in the ongoing trade tensions between the world's two largest economies. China announced on April 11, 2025, that it would raise tariffs on U.S. imports from 84% to 125%. The move, which takes effect immediately, is a direct retaliation to Washington's earlier decision to raise tariffs on Chinese goods to a staggering 145%. This tit-for-tat escalation underscores the deepening rift between the United States and China, reigniting fears of a prolonged global economic conflict with far-reaching consequences. Beijing responds to Washington's pressure. China's Ministry of Finance issued a strong statement condemning the U.S. tariffs, calling them a violation of international trade rules and a form of unilateral bullying and coercion. Chinese officials stressed that the U.S. has repeatedly ignored global trade norms, forcing Beijing to act in defense of its economic sovereignty. In a symbolic yet meaningful gesture, China also filed a formal complaint with the World Trade Organization, WTO, accusing the United States of engaging in unjust and disruptive trade practices. By doing so, Beijing is signaling its intent to challenge Washington not only through tariffs, but also through legal channels within the multilateral framework. The ministry made it clear that the tariff hike is designed to safeguard the legitimate interests of China's economy and to offset the damages caused by the aggressive U.S. measures. "We do not want a trade war, but we are not afraid of one," said a spokesperson. China will take all necessary steps to protect its industries, workers, and economy. Shockwaves through global financial markets. Almost immediately after the announcement, global financial markets reacted with alarm. In Europe, major indices slid sharply, with Germany's DAX falling over 3% in afternoon trading. The stock market, one of the financial hubs of Europe, saw red across almost all sectors, an indication of widespread investor anxiety. The initial optimism that marked the start of the trading day quickly faded as traders digested the implications of Beijing's move. Analysts noted that the markets are becoming increasingly sensitive to any sign of escalation in the trade war, particularly between economic powerhouses like the US and China, which together make up more than 40% of the global GDP. US markets also opened lower, with key indices like the S&P 500 and Dow Jones Industrial Average declining in early trading. Technology, industrial, and retail sectors were among the hardest hit, industries most exposed to international trade dynamics. Implications for developing countries beyond the immediate impact on major economies. The United Nations Conference on Trade and Development, UNCTAD, expressed grave concern about the effects on developing nations. Many of these countries are heavily integrated into the supply chains that run through both the United States and China. Disruptions in trade between these two giants could lead to factory shutdowns, job losses, and decreased export revenues in developing markets. Escalating tariffs between the US and China risk tearing apart supply chains that took decades to build, said a UNCTAD spokesperson. The collateral damage could be devastating for countries that rely on trade-led development strategies. Countries in Southeast Asia, Africa, and Latin America could see slower economic growth if demand for their raw materials and intermediary goods falls due to declining manufacturing activity in China and the US. China's final tariff response, for now. Interestingly, China signaled that the 125% tariff might be its final retaliatory step. In a press briefing, a government official referred to the ongoing tariff tit-for-tat as a joke, indicating frustration with what they see as a senseless cycle of escalation. "There is no benefit to this economic brinkmanship," the official said. "We believe this will be our final adjustment as there is no further meaning in continuing to mirror each move by the US." Furthermore, the Chinese government took credit for the recent decision by the US administration to temporarily pause a planned secondary wave of tariffs. According to Beijing, the pressure from their earlier trade actions played a key role in forcing the US to reconsider. Nevertheless, this latest tariff hike creates significant hurdles for American exporters. With duties now at 125%, many US goods will effectively be priced out of the Chinese market. Agricultural products, automotive parts, electronics, and consumer goods are among those expected to be hit hardest. Currency concerns and global confidence. The escalation also comes amid growing concerns about the weakening US dollar. In recent days, the dollar has dropped to a 3-year low against the euro, further complicating the situation. While a weaker dollar can make US exports cheaper abroad, it also raises the cost of imported goods for American consumers and can trigger inflation. More importantly, global confidence in the US dollar as a stable reserve currency is being tested. Analysts warn that a significant loss in confidence could lead to a sell-off of US Treasury bonds and a reshuffling of central bank reserves around the world. Such a scenario would have profound consequences for global financial stability. Outlook, uncertainty, and risk ahead. As of now, there are no signs of the US and China returning to the negotiating table. Both sides appear entrenched in their positions, unwilling to show weakness. The rhetoric has become more confrontational, and economic policies are being used as weapons in a broader geopolitical contest. For global businesses, investors, and governments, this represents a period of heightened risk and uncertainty. With every new round of tariffs, the chances of a global economic slowdown increase. And for everyday people, workers, consumers, and small businesses, the fallout may soon become very real in the form of job losses, higher prices, and reduced opportunities. The international community continues to watch with growing concern, hoping that diplomacy will eventually prevail over confrontation. But for now, the trade war remains very much alive and escalating,